Thank you so much for joining today's session. We'll get started here in a moment. We're just going to verify the audio. Appreciate your patience and thank you so much for taking the time to join. So let's go ahead and get started. Sounds like the audio is working. So let's go ahead and get perfect. So today's session is going over the top compliance rules to know for those who are considering doing a ROBS 401k transaction. So let's take a look at our roadmap here. So we got what is a ROBS 401k? So we're going to first start talking about the basics as far as what is a ROBS transaction. And then we're going to go through the top compliance items to know. I would encourage you to ask questions in the chat, and I will answer those questions as we go through the slides. If you're watching on a recording, you can ask questions in the comments, and we'll get back to you within 24 business hours. So please, of course, like this video. Please subscribe for more videos like this. So here, this slide has a good overview of the basics of a ROBS transaction. So in simple terms, a rollover as business startup or ROBS 401k transaction allows you to use your retirement money to start or buy a business without paying taxes or penalties. So the key requirements are that you have to have eligible money. So that's going to be money that's in a former employer plan or a non-Roth IRA. You have to use the money to start or buy an active business. So that's going to be an operating company that's providing goods or services, or it could be a real estate operating company. You have to run the business as a C corporation, and you have to work in the business. So one of the foundational requirements is that you need to be a bona fide employee. So typically that means you're working at least 1,000 hours a year. As far as the key steps, we've got them listed here on this slide. So the first step in the process is that we would get the C corporation established. Usually that's going to be in the state that you live in, the state that you are going to operate the business in. And then once the corporation is established, the corporation is going to adopt a 401k plan. So we are an IRS approved 401k plan provider. Our plan allows for funding your business or investing in company stock. So the corporation would adopt the plan, an account would be set up for the 401k, because when you want to make sure that the flow of the money is consistent with what you're doing. So here you're rolling it over from your former employer plan or your non-Roth IRA to your new 401k. So it first goes into the 401k account, step 3, and then separately, you would have been opening an account at the bank of your choice for the C corporation. That's ultimately where the money is going to be deposited. And so that would be an account that you could use as your operating account going forward. And so that's where the funds would be invested. So they would go from the 401k account into the business bank account. The company, the C corporation, is going to issue stock to the 401k for your benefit. And then you or the company can use the money that's invested right away for any type of legitimate business purpose. So that's really in a nutshell, what's involved with a ROBS transaction. So now let's dive in. And again, I would please encourage you to ask questions, and we'll get these questions answered as we go through this. So the first top compliance item to know here is that Roth IRA funds are not eligible. So if you have money that's in a Roth IRA, you can't roll it over to any type of 401k, including a ROBS 401k. So you can't use those funds through the ROBS 401k. Of course, you could take a distribution and use them however you see fit, including investing in your own business. But you're not going to be able to roll them over to a ROBS. If you have Roth money, ROTH, Roth money, those funds need to be held in a separate sub-account. So it's important that that is understood so that a proper account setup can be done. So for example, you would have one account in the name of the 401k for your benefit for your pre-tax money. You'd have a separate account in the name of the 401k for your Roth money. So the Roth money would go into that separate Roth account. Lastly, here on this slide, we're highlighting the fact that the money generally needs to be in a former employer plan. So if the money that you want to use is in your current employer plan, you're typically going to have to quit your job before you can roll it over and fund a business via a rollover as business startup via a ROBS 401k transaction. Now, there are some exceptions. So for example, if you had rolled money from a previous job into your current plan, typically you would be able to roll over or transfer out at least those funds. You're going to want to check with the plan administrator, because it's going to come down to how your employer drafted the plan documents. Another exception would be is if you're over 59 and a half, so you've reached retirement age, then you wouldn't have to quit your job or what they call separate from service. But those are really more of the exceptions rather than the rule. And so it's important to understand, that you have, of course, eligible money before you start to proceed down the path of funding a business via a ROBS transaction. We'll keep going, but please don't hesitate to ask questions. So the ROBS 401k fee, and I see that we've got a question. So we'll just jump and handle this question before we keep going. So thank you so much for asking the question. We do appreciate it. How long must have you been terminated before you can roll over? That's a great question. Usually it's just a matter of getting the records updated. So if your former employer plan is at Fidelity, once you have your last paycheck, the HR department at your employer notifies Fidelity that you're separated from service, and there's usually no waiting period at that point. Sometimes, however, again, depending on how the employer has drafted the plan, there is a waiting period. Usually it's no more than about 30 days though, after you've left your job. Of course, there are some extreme examples, like if the money is in an ESOP, then it could be as much as a year after you leave. There's usually a period during which you can roll over the money. So, but the general rule of thumb is it's probably going to, just practically speaking, a couple weeks, because you got to get your last paycheck and the payroll has to be updated so that the administrator is updated. It could be another month though. Like for example, if your employer has that waiting period built in. Hopefully that answers your good question. So let's go through these items. And again, please don't hesitate to ask more questions. So the first point on this slide, number 4, the ROBS 401k fee can't be paid with retirement money. And that is a fundamental requirement from the regulators, that you cannot use retirement money to establish the plan. And so you don't want to be reimbursed and have the company or have 401k money used indirectly by reimbursing you. So you don't want to do it directly or indirectly. And so that also means that once your C corporation is funded with your retirement money, you're not having your C corporation paying off your personal credit card that was used to pay the fee. That's actually even introducing another compliance issue there. But ultimately, what happens for practical purposes is that you would receive stock personally in exchange for paying that ROBS fee with your non-retirement money. And that's going to be helpful from a ROBS 401k compliance perspective, because under the ROBS 401k rules, you cannot own 100% of the stock through the 401k. So that would help satisfy that requirement. You would still want to coordinate with your business tax advisor to report that cost of setting up a 401k plan as a business expense. So from your perspective, it's part of your personal investment for which you would receive stock in the company. From the business perspective, it's an expense. Next point, number 5, you must be a W-2 employee. So that's a foundational requirement here, like we talked about in the first slide. And that comes back to the fact that the way that you're able to fund your business with your retirement money is you have to follow specific steps and structure. And so one of those requirements is that you are funding your business through a 401k. So a 401k plan is for W-2 employees. It's not for miscellaneous contractors, independent contractors. So you need to be a W-2 employee of the company that's sponsoring the plan, that C corporation. And when you get to the point where you're receiving compensation or salary for the work that you're performing for the company, of course, that means it's reported as W-2 wages. Point number 6, the ROBS 401k funded business must be operated as a C corporation. So again, this is a way to fund your business using your retirement money, but you have to follow specific requirements. One of those is that you need to operate the business as a corporation that's taxed as a C corporation. There's no exceptions. It cannot be an S corp or a partnership. And that business, we should note, needs to be an active operating company, like we highlighted on the first slide. And I do note that the C corporation can have subsidiaries. So it could have like a wholly owned subsidiary, say, that owns the real estate, and maybe another subsidiary that operates the business. Those would be 100% LLCs that are taxed as disregarded entities, because this, it couldn't be an LLC taxed as an S corp, because an S corp can't be owned by a C corp. Or you might have different subsidiaries because you have different locations, maybe of a franchise. And I see that we've got, can you pay the ROBS fee with a credit card? We like our free Starbucks coffee. Okay, great. Yeah, who doesn't? It's expensive too, right? So the answer is yes. You can pay the ROBS fee with your personal credit card. Great question. And then you would, of course, like we talked about, need to just pay off that personal credit card with other money, not with money that you've invested in this C corporation. So thank you for those good questions. So let's go to the next slide. Number 7, income and expenses must flow through the ROBS C corporation. So this entity here is not just a shell entity, it's an active business. That's your operating account, right? The bank account. You could use that as your operating account. So, when customers pay you with a credit card to your merchant account, it flows into that account. When you pay for vendors or employees, you're paying them from that account. And so you're filing a C corporation tax return, like an 1120 at the federal level. Any compensation that's paid to you, it's paid as W-2 wages. If the company is distributing profits, those go up to the owners, the stockholders, and they need to flow in accordance with the ownership percentages. So, let's say, in simple terms, you're generating income, the C corporation has expenses, which would include the W-2 wages that are paid to you as salary. And then it has its, taxable income. The C corporation pays tax on that taxable income. And then it has its after-tax profits. It could decide to keep, retain the earnings if you're trying to, keep it to grow the business. But if you're distributing those profits, they need to be distributed in accordance with the ownership percentages. So part of the money would go to the 401k for your benefit, and part of the money would go to you personally as a dividend in both cases. Of course, if it's a dividend going back to the 401k for stock that's in your 401k, that's going to grow on a tax deferred basis. Those dividends that are going back to the 401k. Number 8, your compensation must be reasonable. So the number 1 is you want to wait to receive compensation until the C corporation is generating income to justify your compensation. Like we've highlighted in a couple of these items, it needs to be paid to you as W-2 wages. So coordinate with your business tax advisor. And so what is reasonable? So in simple terms, that's going to be something that's not more, a total compensation, whether that's your salary, your bonus, etc. However it's paid, not more than what the company would have to pay someone else to do all of the things that you are going to do and all the roles that you will have in the company. Number 9, the ROBS 401k can't guarantee a loan to the ROBS C corporation. So certainly this business, this corporation can obtain a loan. It could be an SBA loan. That's very common. It's popular, especially in the franchise space, to obtain an SBA loan. It could obtain a non-SBA, but still just a regular commercial loan. So it's in the name of the C corporation. You can personally guarantee that loan. However, you don't want to sign something that indicates that the 401k, remember, it's one of the stockholders, is somehow guaranteeing that loan. So please don't hesitate to ask more questions. We do have another slide here. We've got number 10 and then a few more bonus items to know. So number 10, your ROBS 401k funded business cannot do business with any other business that you or a disqualified person owns. So simple example, let's say that you, very maybe quirky, but let's say that it's a farmer that has a dairy farmer and wants to use a ROBS transaction to fund an ice cream business. So if that farmer set up a ROBS C Corp, rolled over money, funded the C Corp, started the ice cream business, but then wanted to have that C corporation buy milk from his dairy farm, that would be prohibited, because that would be a transaction between the C corporation and another business that he owns in his own name, his farm. And so there is a Department of Labor opinion letter out there that could be used to easily challenge that as a prohibited transaction. You know, other simple examples could be, let's say that you own commercial real estate and you were planning on having this ROBS C corporation lease commercial real estate space from this other entity that you own that owns that commercial real estate. Another example. So that's something to be mindful of, because I know a lot of times small business owners, they've got multiple businesses and they might have advisors that are coaching them up to do these types of related party transactions. And that's something you can't do with a ROBS. Of course, you can have a subsidiary, but that's not outside of that C corporation umbrella. Like this, the C corporation could own real estate through its subsidiary, but it can't lease it from an LLC that's owned by you personally or some other disqualified person, like your parent or your child or your spouse. And another great question here. So company profits, before we go to the bonus items, we'll field this question. So company profits can be used, say, at end of fiscal year to buy shares from the 401k. So yes, that is correct. So that would be what's referred to as a buyback. So, you know, the company has paid expenses, including your wages, it's paid its taxes on the income that it makes. It could take that after-tax profit and buy shares back from the 401k. That's the opposite of how you initially funded the business, right? You rolled over money in the 401k and then you bought stock from the C corporation. Now the C corporation can turn around and buy that stock back or part of that stock. So if it does that, the C corporation would need to pay fair market value at the time of the buyback. The money would flow back into that 401k account and it would reduce the shares that are held via the 401k. So from a percentage basis, now you, if you are the other shareholder in your own name, are now going to own a greater percentage in your own name and reduce the relative percentage owned by the 401k. And we got another question here. We'll go ahead and field this one too. Thank you so much. So once the 401k is funded, can you take a loan? So, and presumably, well, there's two scenarios you might be referring to. Number one, can the corporation that's funded with your retirement money, can that corporation take a loan? And the answer is yes, absolutely. It needs to be, like we noted in number 9, in that situation where the business is taking the loan, it needs to be in the name of the C corporation. You can personally guarantee the loan, but you don't want to sign something that indicates that the 401k is guaranteeing the loan. If you're talking about a 401k participant loan, that's also allowable. Like let's say that a 401k participant loan, for example, is where you borrow up to 50% of the balance, not to exceed $50,000. So let's say you rolled over 200,000, you put 150 into the business to buy stock in the business. there's a remaining 50 in the 401k. You could borrow that 50 as a 401k loan, and then, but you have to be mindful that you're going to have to pay that back. You don't want to forget about that, because then it would become a taxable distribution. But yes, technically you could do that. Of course, it would have to satisfy all the other requirements, like it needs to be payable either monthly or quarterly, equal payments of principal and interest. The interest rate has got to be reasonable, so prime plus 1%. Payments spread out over a 5-year term. Like I mentioned, equal payments, documented as a loan. And you're talking about a 401k participant loan. Got it. So yep. So that's where you're borrowing from the 401k, the money that's not invested in the business, paying it back to the 401k, documenting it as a 401k loan. So that's the type of service that we provide in terms of preparing those 401k participant loan documents to satisfy those compliance requirements. More questions. That's fantastic. Thank you. So share percentages boil down to how much money is claimed as the initial investment upon incorporating. Example, 20,000 from 401k and 20,000 from me means a 50-50 split, just as 10,000 from 401k and 10,000. Exactly. So it's strictly proportional based on the cash invested. Exactly. So you can't pick and choose and say, I want to have 50% held in the 401k and 50% held by me if you're not investing 50% of the money from your non-retirement fund source. But if you are, then yes, it would. Yep. So I think we answered that question. So let's go through the more items to know. So number one, funds from inherited, inherited IRAs are not eligible to be rolled over to a ROBS 401k unless you inherited it from a spouse. So that's just the way it is. No personal loans to the ROBS C corporation. So if you are investing money in the business, you're buying stock. You're not lending money to the business. Again, that's another example where you might have experience in your prior small business ownership where you had an advisor have you loan money to your business. That's not something you can do. You buy stock in the business and it's documented as a stock purchase. ROBS C corporation can't own an S corporation. So we touched on this before in terms of a subsidiary, where, like, let's say you have different locations of your franchise and you want to put each one into a different subsidiary. You can do that, but it has to be an LLC that's taxed as a disregarded entity. It's not going to be an LLC taxed as an S corp, because an S corporation cannot be owned by a C corporation. And of course, we know that this business has to be taxed as a C corporation. Another scenario where this could come up is if you're buying a business. So typically, in our experience, our customers are buying businesses as asset purchases. But in some scenarios, they want to buy a business as a stock purchase. So if you're buying a business as a stock purchase, you want to be cognizant of whether or not that business is an S corporation, because again, a C corporation cannot own an S corporation. So it can't buy the stock of an S corporation and now own that S corporation. We got another follow-up question. So thank you so much. And I think we got some additional questions. So you're saying, what is the, okay, we got a few questions. So we'll take them one by one. Thank you so much for all these great questions. So what is the benefit of the 50-50 split, or any percentage for that matter? So the point, there's a number of points, is that the way, taking a step back, if you're trying to use your retirement money to fund your business, you need to do so under specific steps. So this is referred to as a rollover as business startup, or a ROBS 401k. So the way that you fund the business is you buy stock in your new employer through your 401k. That new employer has to be taxed as a C corporation. And so the amount of stock that's issued to the 401k is strictly proportional, dollar for dollar. So if you roll over $90,000, excuse me, $100,000, and then you invest 90 in your business from the 401k, and then you invested $10,000 out of your personal savings, right? Then 90,000 shares are issued to the 401k for your benefit, and 10,000 shares are issued to you personally. So it's strictly proportional and there's no flexibility. You cannot say, even though I'm investing 90,000 for my 401k and 10,000 for my personal, I only want 50% of the stock to be in the 401k. It has to be dollar for dollar. As far as the practical impacts of that, a good example goes back to what happens when the company distributes profits. So, which we talked about a couple slides ago. So when the company distributes profits, those profits have to be distributed in accordance with the ownership percentages. So if you own 90% of the stock through the 401k, if the company distributes $1,000 of profits, $900 is going back to your 401k and $100 is coming to you personally. So that's a good example of the practical impact. Of course, day-to-day operations, you control this company. You know, you don't have to come to us to get approval just because we're the 401k plan provider to make a business decision. You're the trustee of the plan, etc. Follow-up question, can I lease equipment to the business? So this is a variation of point number 10. So the answer is no. You cannot lease equipment. You cannot lease real estate. You know, you can't be a vendor. You can't be a lender. You know, your relationship with this company is to be a stockholder and to be a W-2 employee. What would it take to later become an LLC or any other type of corporation? So this goes back to our prior discussion about buyback. So the company, like we talked about, can buy back the stock from the 401k, subject to the rules, right? It needs to buy it back at fair market value at the time of the buyback. The money flows back to the 401k account that reduces the shares that are held by the 401k. Ultimately, if that company decides to buy back all those shares from the 401k, now you are the sole shareholder in your own name, you know, as a natural person, not through the 401k, such that there are no more shares held through the 401k, the corporation could elect to be taxed as an S corporation or convert to an LLC at that point. You would still have a 401k though, keep in mind, to the follow-up comment there. This company would still have a 401k, you just wouldn't own company stock anymore. So you would still need to follow the 401k rules in terms of maintaining the 401k, but yes, the related party transactions, loans, things of that nature do fall away, yes. Hopefully that helps. So that takes us to the end of our slide here. So we've got our contact information. Please don't hesitate to ask more questions as we do have plenty of time. You can contact us at business@mysolo401k.net. You can call us at 1-800-489-7571. Thank you so much for the participation and checking out today's webinar. If you're watching as a recording, ask questions in the comments or contact us via one of these ways here. Please like this video. Please subscribe for more videos like this. Thank you so much. Looks like we don't have any more comments, so have a great day, everyone. Thank you.